Welcome everybody to a new analysis of Tradomics. This is the episode 64. As usual, at the beginning of the month, we're going to have a look at the main US indexes, namely Nasdaq, Standard & Poor's, Dow Jones, and Russell. We study their indexes because this is a reference point for us to better understand the trends of the stocks that we regularly analyze on this channel. So if you have some of the stocks among your favorites that are reported in these videos, please, you can subscribe to our channel to get notified as soon as possible regarding the analysis. On top, if you want to know more about our methodology that is specifically designed to study the stocks and especially their durations in terms of cycles, upward and downward cycles, you can always refer to our video introduction to the T-cycle analysis. So let's get it started with Nasdaq 100. So the last week was particularly prominent because the majority of the Magnificent Seven stocks reported their earnings. And next week, we're going to have the US presidential elections. So we have had some turbulences last week, and we're going to have some expected turbulences also next week. So the volatility might be higher compared to the average. That's what we always expect during the doubtful periods. But our methodology can also offset some turbulences or some expectation because based on the cycles, especially based on the moves of the HFT high frequency trading that are used by funds, we can also predict statistically which direction of the price we're going to have. So in the last video that we issued, we were saying that this top here that was made on the 26th of September 2024 could have been the beginning of T plus, so more than a weekly cycle. And now we have had more information in the last month regarding this cycle. And if we now gauge the total duration from this top to the day before the second top here on the 28th of October, we have 23 bars. So basically now we can say that this upward cycle here that have been slightly positive, neutral positive, has been a T plus 1 because 23 bars are encompassed between 2 weeks cycle, T plus 1, 23 bars. So now we can definitely update the chart. So here we've removed the T plus, and here we put a T plus 1. So now if we zoom a little bit back and we go a little bit backwards, what we can say is that from this top, we have had a negative upward T plus 2. Then from this top to this top, we have had how many bars here? We have had another T plus 2. So we have had another T plus 2. And from this top to the top that I showed you before, we have had a T plus 1. Now the thing is that if we gauge the total duration from the absolute top to here to Monday 28th of October, we have 78 days or 78 bars, as those are daily bars. Therefore, here we are close to a maximum duration of a T plus 3 because the duration of a T plus 3, the maximum duration is 89 days. So now we have to be careful and, of course, aware that from the top made on the 29th of October 2024, we might have the beginning of a T plus 3. Okay, so the beginning of a T plus 3 is one option, but can we say certainly that from this top we will have a T plus 3? Of course not, because we don't have now enough duration to say that from here we can have a T plus 3. At the moment, we have 1, 2, 3 bars that are lower to this top. Therefore, here we have just a weekly cycle at the moment, weekly upward cycle. But we have a duration of a T plus 3, but it doesn't mean that we're going to have another T plus 3. We might have also T plus 2 or even a T plus 1. Depends on the volumes and depends of the amount of buyers that there will be in the following weeks compared to the amount of sellers. Okay, so this is one thing that we need to be aware of. The second thing is, let's have a look at the downward cycles. So from this low here, sign it as a T plus 3, but potentially something more. We have at the first T plus 1, and from this low to this low, another T plus 1, because from this low to this low, we have had a duration of 17 days. And from basically the T plus 3 until here, we have had a duration of 40 days. So from this low here, we can consider the beginning of a T plus 2, because we have finished a T plus 2, and now the assumption is that after a T plus 2, we can have another T plus 2. Is this something that is recurring in the indexes? Yes, generally, the majority of the time we have such rhythm. But as you have seen also here, we might have a T plus 2 plus a T plus 2 plus a T plus 1. So here we might have a specular situation in which we have a T plus 2 plus a T plus 1, and then here we can have a completion of a T plus 3 and then something else. Okay, so in general, we might have a regular rhythm, but it doesn't mean that after a T plus 2, we have to expect another T plus 2. Now, what can we say about the last moves is that given that we have had this push to the downside that broke up, first of all, this level, and we are nearly to break also this level, it means that we can start having more than a weekly upward cycle, but something more than a T. So either a T plus 1 or a T plus 2, because the swings of reference have been broken. Okay. And at the same time, if we gauge the duration from this low, we have a duration of 22 bars, which is close to a minimum duration of a T plus 2, 24 bars. So basically here we would need another couple of days to the downside in order to complete a T plus 2. Okay, because now we have 22 bars. We can also, as said, have a T plus 1, which would be already enough to close a T plus 3 and then something else. So from this low, we might also expect a push to the upside. And if this push to the upside will broke up this high, then we will have an upward cycle that will turn into a positive one. Okay. Now, the thing is that as this is a critical point for the, here we can start saying this is a T plus 2. If this T plus 2 will be broken to the downside, here I can also put T plus 1, T plus 2, just for a matter of completeness. If this low will be broken to the downside, it means that it will be broken at $19,622. Then the expectation would be also to have potentially more days to the downside. Potentially more day to the downside is minimum duration 24 bars, but also median duration 32 bars, or even 44 bars. Okay, so the thing is that we can also go to the downside for at least mid of November. Okay, but we have also to consider the weekly downward cycles in the meantime. So the framing of the chart that I have is that first weekly downward cycle, a positive one, second weekly negative cycle, and now here we are on the third weekly cycle. This third weekly cycle has reached a duration of 6 days. So 6 days is already the minimum duration of a weekly cycle. So therefore, from this candle, we might have the beginning of something new. But statistically speaking, given that this is already a negative cycle, the expectation is to have further downtrend at least on Monday or even Tuesday. And such expectation would be to go below 19,880. So to complete actually this negative cycle. So we have one possibility to the upside out of 5 possibilities to the downside at the moment, because if you remove 11 minus 6, we have 5 days. So 1 day already completed, 1 day to the upside and the other 5 days to the downsides. Okay, so that would be roughly 20% to the upside from Monday and 80% to the downside. So this is statistically the possibility to expect the future, let's say, move from the beginning of next week, especially on Monday. One of the target price that I have for beginning of the next week is this one, which is 90,836. So that would be the first target. And then the second target would be, this is really short term. So this will be second one here would be 90,622 and also 90,763. So the second will be 90,763 and the third one will be 90,622. So here we might have more possibilities to complete this T+2 at least by Wednesday, where we're going to reach 24 bars. From here, we have a possibility to have more than a T+1, considering all the swings that are broken. So beginning of the next week, expectation to have more downtrend rather than uptrend. But here we have already a condition that is already sufficient to say the T+3 here is over, and then we might expect also, which is less probable, push to the upside, especially if this push to the upside will go higher at this point. Then therefore we will have, as said, an upward cycle that will be binded to the upside. Considering now the total duration from this T+3 until Friday's candle, we have 64 bars, which is already a medium duration. So another thing that is interesting to note, and this is just the cherry on the pie, is that from this top we expect to have a T+5. Okay, so we have gone really close with this top, but we haven't broke this up. Okay, but given that we have the possibility to compare different indexes, and this is just an exclusive, I show you also another one, and this is the Nasdaq Composite Index. And guess what? From the Nasdaq Composite Index, I have also different frame for the downward cycle made on purpose, is that this top occurred on the 30th of October 2024 as signed, let's say, a high at 18,785. And this top was 18,671. So basically this top is higher compared to this one. Okay, so for those of you that know the introduction, the T cycle analysis or the cycle analysis or introduction to the T cycle analysis, you can refer to our video. This is already another really important information to what has happened to Nasdaq Composite Index. Okay, and I give you basically room to think about what this could mean. So having said that, this is what I can say regarding the Nasdaq 100. So let's move to Standard & Poor's. So the Standard & Poor's 500 is definitely stronger than the Nasdaq because from this top here, what has happened is that the Standard & Poor's has continued to update the highs, something that we haven't seen on Nasdaq. So therefore, Standard & Poor's at this particular point in time is definitely stronger than the tech index. Okay, so in the last analysis, we were also foreseeing this move to the upside because from this top we have had a T+2 that was turned into a positive one. And by the rules, when a cycle is turns into a positive one, the extension of its trend goes in the same direction in which the breaks occurred. So in this case was to the upside. And now here, if we gauge the total duration, we have 37 bars, so close to maximum duration. So analysis correct. Hope that the last video was inspiring for you to manage your position. And now from this top here, we have a new weekly, which we can say as for Nasdaq, something more than a weekly upward cycle, because we have had already several candles below this top. And so at this particular point in time, we have had roughly 12 days. So it's basically one weekly cycle. So this is already a T+2 upward cycle. Let's put here a T+2, which might be a T+2, but also something more than a T+2. Something more because gauging again the total duration, here we have at 67 days. So T+3 completed. And therefore, here we can expect another T+2, T+3, or even T+4. Time will tell us exactly what here is going to we're going to have. But of course, as of Nasdaq, here we have had a retracement that's already gives us information that this is a T+2. And if we go even lower than this swing, here we can have even a T+3. Having said that, from a downward cycle perspective, we have a similar situation as for the Nasdaq, because here we have 41 days. So here we can have a T+2 sign it. Or let's say T+1, T+2, because I don't give, let's say, I don't give it by fact that from here we have a T+2, but here we have definitely a T+2, but also a T+1 here is enough to say, okay, the T+3 is completed. And we have had our first touch on the moving average 50 period. Now, if we consider the weekly downward cycle, here we have had the first one, then the second one, and here we are at the third one. If we gauge the duration from the second one to the third one, we have 6 days. And again, here we have another weekly downward cycle of 6 days. So 6 days is already enough. But as said for the Nasdaq, we have less possibilities to have this move to the upside, and at least for the beginning of the next week, but more possibility to have another downtrend, which at least goes lower than $5,702. And in this case, we need really just a little, let's say, push to the downside, because we would need less than minus 0.5%. Okay. And with this move eventually that we're going to have at the beginning of the next week, this will be enough also to close the T plus 4, the T plus 2. Okay. So of course we might have more downside trend, and especially we might have downtrend. This is also true for the Nasdaq until 11 days, which is the 6th of November 2024, the day of the elections, because the election will be on the 5th, and then the starting results will happen on the 6th. So nothing occurs randomly here. So we might have downtrend until the elections, but also we might have also a push to the upside. So you have to keep into consideration that this is a negative downtrend. So even here, I foresee more downtrend rather than uptrend, at least for really the short term, at least until mid of next week. But then we will have all the condition to close the T plus 3, of course, which we already have, but especially to close this T plus 2. And from here, we have already a T plus 2 in place, which might be a T plus 3. But here we have also a T plus 4 that is already a positive. So we might have this move, and then back to the upside, because here we have a T plus 4, which is positive as well. So we can further proceed to the uptrend until at least 94 days, which means that we can expect to return back to the tops at least by the 25th of November 2024, at least, if not December or even January 2025. So Standard & Poor's, as well as the Nasdaq Composite, is giving us some additional information that we don't have on the Nasdaq at the moment. So this is why it's important to compare what we have at our disposal to have more clues regarding what we might expect by next week and also in the next months. So I leave this arrow here because here we expect more downtrend rather than uptrend, statistically speaking. But let's see if next week we're going to have a touch on this moving average 200 period and then a bounce to the upside, or whether we will have a more further downtrend. And regarding the further downtrend, here we can just drag a Fibonacci retracement. So one of the key targets would be, and you see also moving average 50 period, the first Fibonacci retracement level. The second one would be 5,588, and the third one will be 4,999. Okay, so that would be another additional targets that I give you in this video. Having said that, let's move to Dow Jones. So on the Dow Jones, we have a slightly different situation compared to Nasdaq and Standard & Poor's. First of all, here we were saying during the last analysis that we would have expected more uptrend, given that this T plus 2 upward cycle was already positive one, and therefore, as for the rule of the cycle analysis, once a cycle turns into a positive one before its minimum duration, then the extension of the minimum to the maximum duration is in the direction in which the price has been broken. So in this case was to the upside. And if we now gauge the total duration from this T plus 1 until its top, it's 16 bars. And from this T plus 2, the total duration has been of 35 days. So analysis correct. And now what we can say on top of it is that we have now all the condition to close not just this T+3, but even this T+4. So this is why the situation is slightly different, because this T+4 from this top, which we assigned the T+4, happened before the Standard & Poor's and the Nasdaq, and here the duration is basically completed. So from this top here, we might expect a T+2, T+3, or even a T+4 ongoing. Okay, so at the moment we have considering the total amount of candles below the top, we have a T plus, at least a T plus 1 or T plus 2 upward cycle. But of course, here we have to monitor the situation over time, because we might have more than a T plus 1, T plus 2. Okay, especially because this level of price has been broken with this candle occurred on Thursday, 31st of October. Okay, what we can say also regarding the downward cycle is that this T+2 that was made before the T+2 compared to Standard & Poor's and Nasdaq has reached 36 days. So if you remember, on Nasdaq and Standard & Poor's we are at 22 days, but here we have 36 days. So therefore what can happen is that either this cycle is completed and therefore next week bounce back to the upside, or again another weekly downward cycle, -1, to close this T+2 up to the maximum duration, which can be forecast until 11th of November, and then see what is going to happen. Either a new cycle that can also return to the absolute tops, or the beginning of a cycle that will not return to the tops, and then we will have to monitor the situation. Okay, so regarding the total duration also for this T+4, we have now reached 137 bars, so more than a median duration, but still we have time to eventually attach another T+2, or potentially even a T+3 if we consider Bayer tongues. So here we still have time to do whatever they want. And if we also gauge the duration of this T+5, we have reached 256 days, which is a median duration for a T+5. Okay. Another cherry on the pie that I want to add for the Dow Jones is the weekly situation. So here last week we have had doji. Okay, so here we might have a trend reversal for the next week, but this has to be confirmed with the subsequent candle. So it should be a green one that will drag the price back to the upside. Otherwise, if this will not be confirmed, then further uptrend, downtrend. Okay, especially because here it's not really an engulfish bearish candle, but something that denotes create a retracement, and also the beginning of a cycle that it's more than a T+1 at the moment. Okay, so this is the situation. So on the Dow Jones, time is definitely ahead compared to Standard & Poor's and Nasdaq. Here we have less evidences regarding what can happen next week, but of course, statistically speaking, if we focus on this T+2 here, we have definitely less days to the downside and more days to the upside. So if we want to have a key message for the Dow Jones, is that statistically speaking, we have more possibility to the upside rather than the downside. which is not exactly true for a Nasdaq and Standard and Poor's, unless they wanted to close the T+3 made of a first T+2 and then a T+1. Okay, a little bit complicated to understand, but if you watch the video several times or if you go to the introduction to the T cycle analysis, pretty sure that you will have a better understanding over time. So now let's move to the last one, which is small cap index Russell 2000. The Russell 2000 is the easiest to read because here we already know that considering this T+5 upward cycle that's turned into a positive one, we can continue to extend the trend until its minimum, medium, and maximum duration. This means that we can further extend the rally even if now we are basically floating to this level of price between 2000, 2300 and here from 2000. So we are not really proceeding in a stronger way to the upside, but still we know that we can continue to update the tops until a minimum duration of 190 days, which will be end of the year. But of course, we can continue until a medium duration, so until March 2025 and even beyond. So this is the trend for let's say long-term trend. Regarding the short term, we know that what we were saying during the last analysis was a return to the upside because this T+2 and this T+3, given that belong to this T+5, are positive one. So here we have had a nice return to the top that was done on the 18th of September. This return to the top has been done after 20 bars or 20 days. So here we can update the chart accordingly. Here we have a T+1 upward cycle, and also from a specular perspective, downward part. Sorry, here from this T+2. We have had 21 bars, so here a new T+1 downward cycle. Okay, so here we have specular situation T+2, T+2 upward cycle, T+1 downward cycle, T+1 upward cycle. Okay, so regarding the election, what could happen is that we might close this T+2 that has reached already 36 days. Here we have already the condition as for the Dow Jones to basically close this T+2. But of course, we can add another week eventually to close it, let's say, properly or in a better, let's say, shape, and then return it to the upside. Okay, statistically speaking, as for the Dow Jones, here we have for the next week more possibility to have uptrend rather than downtrend because 30 36 days are already wear out of 44. So here we have 8 days or 8 possibilities to the upside compared to all the rest. 8 possibilities to the downsides compared to all the rest to the upside. So if you have, let's say, if you do a quick calculation, we have more than 50%, even roughly 60% to the upside, and definitely less than 50 or even 40% for the downside. Okay, so that's statistically our forecast regarding the short term, but here we have more clear, let's say, picture regarding the return, at least to the stop, not for the next week probably, but for the next weeks or next month, to return at $2,300. So that's the absolute top. So this is the end of our video. I hope I have given you a lot of insights and things to think about before the elections and even after the elections. A lot of things have been discussed, so you can watch the video more times. And if you like what we have produced for you totally for free, you can give us a like. It's just a little support for the work that we do daily. The subscription would be ideal for us as another help to support our job. Having said that, from Dario, thanks for watching and see you to the next episode.